Thank you, Jen.
Thanks, Chad.
We're socially distanced by a SOTY, which stands for Startup of the Year. But if you adjust it, it actually means toys.
Strong, very strong.
Yes. So anyway, all right. Thanks, Anna. It's been a while since I've seen you in person. It's been a minute. So thanks for being here today, and I appreciate it. We've been on bus tours together across the country, but you've done a lot of tours. I think you've done more than I have at this point. How many of you? What have you done with the Rise of Rest? And you do the whole tour, and you've been touring around the country finding companies. Give us like an update on everything that you've been up to with that.
Yeah, and thank you for hosting this amazing event. It's been incredibly special to reconnect with so many great friends from all across the country. So huge round of applause for Embarc and Established. It's really been amazing.
Is this the first event you've been at in person, or has it been?
It now is like the second. But the first one was in New York. Very different vibe.
I'm sure. Yeah.
What's going on? What's going on here?
Yep.
So Rise the Rest started as a bus tour platform back in 2014 to celebrate and spotlight regional entrepreneurship in cities all across the country. We've done 9 tours, been to 45 cities, including Tampa, back on our 8th tour in 2019. Yep. So it's incredible to be back and see all of the extraordinary momentum here and in South Florida more broadly. But Rise the Rest is also now a venture fund. We've got $300 million under management. We've got about 175 companies that we're invested in. And we've just been incredibly busy investing. We actually, 2021 was our most active year since we launched the fund 4 years ago. We made 48 investments in 23 different states. Wow. It was super exciting, including 3 new investments in Tampa. So been super active. So
during the pandemic times, which I think we're still in, I don't know, can't even tell where they blur together. But either way, how has that been? Has that increased the amount of stuff you've been doing? I know the tour is a big part of what you're doing, but have you been investing more because of the, ability to be able to jump on more calls on Zoom and whatnot, or what's that been like?
Yeah, we've been incredibly active, and I think the space in general has been really active, which is exciting to see. At the end of last year, so while we had to temporarily put our formal bus tour on the sidelines, we've been doing a ton virtually, as I know others have in the space as well. And at the end of last year, late December, we came out with a report which we published together with Pitchbook.
Yeah, I was just going to mention that. Yep.
I'll jump.
Okay, jump right in. I wanted to hear about the report.
But this answers your question, right?
Yeah,
because we're thrilled that we've been so active, but we're a relatively small fund in, I think, what's in a very exciting way, really an emerging space. Our thesis is to see opportunity first through the lens of geography. So place matters. We don't invest in Silicon Valley. We don't invest in New York City. We love and have deep respect for both those places, but the vast majority of venture capital over the last 10 years has gone to those 3 places. And we think extraordinary entrepreneurs can have and will continue to build exceptional, transformative, generation-defining companies anywhere in the country. And oftentimes, early-stage venture capital can be the friction point that either you have to get over that hurdle in order to just start to really scale the mountaintop. So that's our thesis at its core. Right. And I think what's been most exciting to me and to us as a fund over this past year is we've actually really started to see the acceleration of, I think, what's starting as a trend and hopefully is turning into more of a movement with staying power, which is that early stage investment is really increasing outside of Silicon Valley. So what our report detailed is that actually for the first time in 10 years, the percentage of early and seed stage funding going to Bay Area startups fell below 30% for the first time in 10 years. Yeah. And part of that is because actually a lot of investors in the Bay Area and in New York are increasingly investing all across the country. And there's also been a tremendous uptick in new venture firm creation. About 1,500 new firms have come into the market over the last 10 years. So just a tremendous amount of capital flowing to more people in more places, and nothing gets us more excited than that.
That's great. That's fantastic. And that's out in Pittsburgh. So if anyone wants to check it out, they can go find it. That report?
It's called Beyond Silicon Valley.
Makes sense. Beyond Silicon Valley. So it's funny, we had Beyond Happiness here yesterday. So we're just going this is all about going beyond.
The theme.
Yeah. Yes, exactly. So what I was going to ask you though is, how is that? So you've seen acceleration in geographic locations and investment. I think you've also seen a little bit of an acceleration in certain trends, right? Like with work and everything. How are you guys seeing that? Because like certain things like education and all, you know, all the areas that you were investing in because it's going to eventually be online has been online. Like, so we've gotten kind of jump started because of pandemic. And so I want to see what you guys are thinking and what you've been seeing out there as you look at a number of different companies.
Yeah, I think you're spot on. And you know, the joke is, you know, the future of work is now just work. The future of education is now just education. Like,
right.
Future's very much so here.
We live in the future
in an accelerated way.
Yeah, exactly.
Which is exciting, scary, all of those things. You know, for us, I think some key areas of focus and opportunity, what we spend a lot of time thinking about and talking about and investing against from a thesis standpoint, are the broader themes of infrastructure, access, and resilience. So for example, we've, you know, on the access point, we've been doing a lot more investing in verticalized fintech, where it's all about increased access and visibility and actual transaction capabilities to alternative asset classes, or expanding the pool of people who have access to investment education. So those are some areas that are interesting to us. On the infrastructure side of things, for me, that's more a commentary on, I think, the relative state of where the technology industry is in general right now. I just think there's a level of maturation in the way tech has sort of come online that now it's almost about like the plumbing and the infrastructure. And so we're seeing a lot of really interesting opportunities on that front. I think that plays out, for example, in supply chain. So I think there's sort of a Gen 2, Gen 3 opportunity that we're seeing come online with more specialized or verticalized supply chain plays. Obviously, that's been an incredibly hot topic with supply chain, you know, used to just be like supply chain nerds in corners would talk about what was happening behind the scenes, and now
it's more nerds,
very much like. So like we're all supply chain nerds wondering where our goods and services are. So in general, if I had to pick 3 topics that I think will move the needle, not just for investment opportunity, but also for entrepreneurs, for people looking to get into the space as, you know, as early employees in startups. 3 key areas that, you know, I'm focused on as we're kicking off this crazy new year. One is money. I think watching where the flows of money going. Obviously, I talked about the fact that more money is flowing to more places. I think more money will continue to flow into venture as an asset class, which is incredibly exciting when you think about just the opportunity.
Just don't follow Big, because, you know, more money, more problems. I don't know if that's true.
I'm going to do the M's, not the B's. I'm going to do the M's.
All right.
The second is movement. I refer to it as like the unbundling of place. So for a long time, we all existed in this sort of value proposition that where you work and where you live had to be the same. Obviously, we all know that's evolving in some really rapid ways. So I hope, and I think this event is just such an important example of it. Being together in person with people matters, and there's a special electricity that I think you get from those in-person reactions. So I don't think we're going to have zero sum, all remote, all in person. There's going to be a brave new world charted on this course, and thinking about the flows and the movement around talent and where people go is a trend we're following really closely. And then finally is meaning. And this is where I think the startup community as a whole has the most opportunity. If there's one seismic shift that I think has unfolded, perhaps for each of us individually and for communities and perhaps even the world at large, it's taking a step back and thinking about what matters. I read this really interesting piece that LinkedIn had put out recently, which said, you know, work-life balance is actually now shifting in subtle but critical ways to be life-work balance, and figuring out how you fit work into your life instead of how you fit your life into work is actually going to be the big coin flip moving forward for the duration post-pandemic. And when you think about where you find meaning, I think the startup community, like, that opportunity inures to the benefit of the entire startup community, because entrepreneurship to me is fundamentally about optimism, like realistic optimism. You're crazy enough to think that you can find the better way, but you're also realistic enough to help make it happen. And that's where I just think there's really exciting opportunity and inspiration for the year ahead.
I love that. And I think about even what Paul just mentioned in reference to like your garden, right? Your life, like figuring out your life first, and then ultimately figuring out what you actually want to do in that. So I love that. So I I wanted to ask you a few topics I thought of while you were talking and didn't want to interrupt you. But basically, you talked about some trends there.
You wanted to interrupt me a little bit.
I did, but I bit my tongue. Yeah, I did. I held myself back. But basically, you're talking about some trends there, and I wanted to just get your take, right? There's a lot of buzz and talk about, and even, your counterpart there, Steve Case, wrote a book all about the waves, right? The third wave, and first, he was part of the first and second and all that, and you've got the third. And now we're seeing Web 3.0. How does that fall into the waves? And what do you think about it? And then also, you're talking about in-person things. I want to get your take on the metaverse as well. So those two kind of areas of, have you been seeing a lot of deals in those areas? Do you care about those spaces? Are you thinking about them? Or
we're seeing a ton in that space. It's I think we're in a stage right now where we're digging in, we're learning a lot, we're having a lot of conversations. I think there are a handful of companies in our portfolio who have long been building in the metaverse. Maybe they just didn't know it yet. We didn't know it yet. All of a sudden, it's all they can talk about.
Right.
For me, and I think this applies not just to Web3 and the metaverse, but for any industry in general. Every 12 to 18 months or so, the cycle flips and everybody talks about the same exact buzzword. I think it's the authenticity of if, where, and how it actually fits into your model.
Yeah.
Or if you're square peg, round hole.
That makes sense. All right, great. So you're here in Tampa. I know you had some meetings this we've co-invested in some companies. You probably did a bigger check size, but we were able to invest in some of the Startup of the Year companies. One is Griffin. So locally, are there others that you're excited about here in Tampa?
Yeah, as I mentioned before, we're invested in 4 companies in Tampa. Not all of them have been announced yet, so I'm not going to blow anybody up.
We can definitely break that news. We can break that news today.
I think there's a broader a broader PR plan. I don't want to step on there.
All right, they won't tell anyone.
But let me answer your question differently.
Yeah.
Rise of the Rest typically writes $500,000 checks into seed stage companies that range from $250,000. And our check size can range from $250,000 to $1 million. We mostly do seed. We do a very little bit of pre-seed, a very little bit of A. I'm loud and proud in all communities, not just when I'm in Tampa, about how special and underrated I think this community is. There's obviously been a tremendous amount of hype, and I actually think well-deserved in other parts of South Florida, but I think there's a really special and intentional community being built here. I love this market. I love investing in startups in this market. I've learned better than to continue to hand out my email from stage, but I will answer that question by saying, in part, I'm here looking for my 5th investment in Tampa. So we'll figure out how to get in touch.
And we have others as well, not just Tampa. So there's quite a few other states involved.
Yes. I should say Rise the Rest is invested in 39 states across the country. So we're trying to get to 50 of 50.
That's amazing. I don't think I've ever met anybody that's invested in that many states.
Part of it, I think, unfolded through the work that we did on the tours.
Yeah.
So while the tours weren't just about early stage startups in isolation, it was really about understanding and experiencing the broader community of innovation and entrepreneurship and that spirit of possibility that's very much so alive and well in cities all across the country. And so it's really since 2014, it's been a really special opportunity for us to get to know so many cities. And that's led naturally just to great investment opportunities.
That makes sense. It's a lot of fun. I mean, it's been a while since we've been on a bus, but gosh, in the moment, it's a grind, right? But in hindsight, you're like, wow, that was amazing, right? So, and I think for those that don't realize it, it's literally like a 5-day tour where you're in a new city every day and you start at 7 a.m. and you're meeting everyone in that community pretty much, including the governors and the mayors and the, everybody. So is there any memories that you have from just doing those tours that you just would love to share? One moment where you're like, oh my gosh, that was the most interesting thing. I mean, there's probably been a ton. But...
Oh, I don't know. Ask me a different question, Tad.
Okay. Is there anything you're looking forward to here in the 2022? It's 2020 part 2. Hopefully it's not like 2020.
I am, so we probably, like so many of you, we had the opportunity to build and grow our team over the last 2 years during the pandemic. And we have put a lot of emphasis on just thinking about how we operate, how we vibe as a team. And one of the things we've started to do is come together with intention. So people are, remote, whether they're local in DC or in some of our other locations across the country. And we've really started to come together with intention on a quarterly basis and just do great, fun things. And we just laid the plans to take our team to Austin, actually to one of our portfolio companies called Collective Retreats, which does these really neat hospitality experiences like in the wild.
Oh, cool.
So we're going to be headed there in a couple months, and I'm looking forward to that.
That's great. All right. Well, thank you so much for being here today. I appreciate it. You're going to be a finals judge here shortly. We've got some great companies, as you saw, the little videos there. I don't know if you had a chance to meet any of those yet.
Thanks, Frank.
But you're going to learn more about them here shortly. So let's give a warm round of applause here for Anna Mason. Thanks so much.
Thank you.